I'm going to be running through the best mortgage rates in the UK right now, and I'm also going to be explaining what's going on with the mortgage market. If you find this useful, hit that like button, but also subscribe to the channel. I will be running through an article on the Money to the Masses website, which we update twice a week with all the latest rates in the mortgage market. So you can see the best fixed rate deals, but also variable rate deals as well. I'm going to jump straight across to that right now. You can see it on screen here. It's called the best mortgage rates in the UK. And going straight down to the best 2-year fixed rate mortgage deals, you can see that with a 60% loan to value, you can get a mortgage deal of 3.95%. Now that has come down fairly significantly since January when I last did one of these updates. It was 4.16 then, it's now down to 3.95%, and that's partly because we've seen that cut in the Bank of England base rate, which now sits at 4.5%. But it's also because we're seeing the market's prediction of where the base rate is going to be in the future has dropped slightly. So they've been a little bit more optimistic about where the base rate will be. Inflation was causing people to predict that the base rate and therefore mortgage rates would end up being higher for longer. Now, this rate is still higher than what we saw back in the autumn. So 3.95% is more than we saw in the autumn, but we are moving in the right direction, albeit very slowly. The thing is, if you go beyond that 3.95%, which is the best rate in the market, and look at what's beyond that, you are still seeing well north of 4%, 4.1% and more. So this is the best rate you're seeing on screen. If you're looking at 90% loan to value, then it's 4.67%. That is the best rate. That compares to 4.98% that we had back in January. It goes to show we're seeing the biggest drops in rates at the higher LTV, so the higher loan to values at that part of the market. That's where we're seeing it. So first time buyers will probably be pleased to hear that. Moving on to the 5-year fixes, you can get 3.92% on a 5-year fix if you've got a 60% loan to value. That compares to 4.06 back in January. So there's smaller declines on the 5-year fixes. So what that tells you is the market is thinking that rates might fall in the shorter term a little bit quicker than they will do over the longer term. The 90% loan to value is 4.46%, so we're still pretty high. Always be mindful of the lender fees. In the last table for 2-year fixes, it was normally £999. Same thing we're seeing on the 5-year fixed deals. Before, we had some really punchy lender fees that were much higher than that, so they've come down somewhat. 10-year fixes we're showing you on screen there, you can see, but there's not much demand for those at the moment. Obviously, I'm talking about best rates. Average rates in the market are very different. So if you're looking at a 75% loan to value, a 2-year fix, the average rate is 5.2%. If you're looking at a 5-year fix, the average rate in the market for a 75% loan to value is 5.44%. But if you're looking at variable rate mortgages, then they're much higher. That's at 5.1% for a 2-year variable rate. I'm going to move on to variable rates actually. So 2-year tracker deals, the best you can get is 4.4% for 60% loan to value. So that's much lower than that value I just read out, 5.1% for a 75% loan to value. Chunky lender fee there, £1,500 you can see. We're looking at 4.79% for the best 2-year tracker deal for 90% loan to value. That's the Cambridge Building Society there. You get 5-year tracker deals as well, but we're looking at something like 5.5% more broadly. So that's much higher than what you're getting on the 2-year tracker. We've got others on here, first time buyer deals, but also buy to lets further down this article, but I'll put a link in the notes so you can look at that at your own leisure. So that's a roundup of where we are in the mortgage market. As you can see, rates aren't coming down as quickly as people had hoped they would in 2025. Much depends on what's going to happen with the economy, but also inflation. I update these videos every month, so do make sure you subscribe to the channel so you get the latest updates. But if you've got any questions, make sure you leave them in the comment section and I will answer them.